In this video, I'm going to show you how you can use the Quant Investment Screener to find net investment ideas. As you know, the net investment strategy was developed by Benjamin Graham with the idea of finding companies trading at less than their liquidation value. Basically, companies trading less than their net working capital value. That's also where the name net investment strategy comes from. Benjamin Graham defined net working capital as cash and short-term investments plus 75% of accounts receivable plus 50% of inventory minus all liabilities short and long term. As you can see, the net formula is very conservative because it assumes that you'll only receive 75% of the value of accounts receivable and only 50% of the value of inventory. In the screener, we have a similar ratio called net current asset value, NCAV, which is calculated as the current assets of the company, which includes cash, inventory, and accounts receivable, minus all liabilities, divided by the market value of the company. As you can see, this ratio doesn't include any margin of safety, as I explained above. So what we can do, or what we want to do, is we want to screen for companies where the net current asset value is equal to 1.5 times the current market value of the company. Let me show you how to do that in the screener. As a primary factor under valuation, we select net current asset value. We are going to limit the choices through one of the filters in the columns, so we're not going to set the slider at all. We don't have any others. We're just going to select all the countries in Europe and North America, as well as Australia and New Zealand, Finland, France, Germany. We're not going to select Greece, Ireland, Italy, Japan. There will be quite a few companies. So select Korea. I can't trade at the moment, so let's not select that one. There's New Zealand, Norway, Portugal, Spain, Sweden, Switzerland, the Netherlands we want, as well as the USA. Then we want to say, let's look at quite small companies. So we can say we want some volume. So let's say $50,000 traded every day. And because we don't want too smaller companies, let's just say 25 million in market value must be the minimum. And then we need to select our columns because we definitely want to have the net current asset value as an output. We don't need these two composite value indicators. Let's see, quality, we need the Petrovsky F-score to make sure that we get better investment ideas. Momentum, we don't need price momentum. Any other general information? No, that's all fine. So then we save our changes, and there you can see the screener is working already. Now let's just look at the net current asset value. We want to make sure that we get companies with a net current asset value greater than 1.5 times the current market value. So we say 1.5 times, and we say greater than. Now the screener is going to filter the values in these columns. And there you can see there's a company in America, a lot of Japanese companies, another one in America, Japanese. There's not that many companies, as you can see. It's not even more than 15, so they're quite limited. As you can see, these are quite bad quality companies, specifically in the market where the markets are quite fully valued at the moment. Let's see if we can increase the value or the quality of the companies in the screener by saying that we want companies with a Petrovsky F-score greater than 6. We say 6, then we increase here, and we say greater than. The Petrovsky F-score, you can read more about it, but it's basically an indicator that gives you an indication of the fundamental momentum of the company. So if it's good, this Petrovsky F-score value lies between 0 and 9, with 9 the best, 1 is really bad. So if you say better than 6, then you have companies with better financial quality than normal. And as you can see, there's only 3 companies that come up on the list anymore. At the moment, of course, when the markets are undervalued, you'll find a lot more ideas. But this gives you a basic idea of how you can quickly screen for net current asset value companies. If you want more information, look at the URL posted below this video. there you can click on and go to an article that gives you some more information about net screening on the quant value screener.